Hello there. This is fairbinaryoptions.com, and this is a follow-through of our presentation yesterday regarding the Euro Japanese yen and how to treat corrective waves when you trade binary options and the retracement levels. And now I would just like to show you, yesterday price was around here, and of course that it came and made a new low when compared with the previous low, this low here. So it made a new low, but this low has been made by price forming a contracting triangle, and this contracting triangle acted as a reversal pattern in the sense that price comes from the upside here, consolidates in a contracting triangle, and then breaks in the same in the opposite direction. Well, this is bullish, and not only that this is bullish, but it implies more strength to come, at least 61.8 as we said out of the whole move. Now what does it mean? Does it mean that the whole move should be considered from the highs here up to the lows here, so from here to here? No, the move stays the same, the area is the same, so we should be interpreted from these highs like this to these lows. So what we need to do is to take a Fibonacci retracement to go and measure the move, and our target to the upside is the 61.8. As you can see, this is 133.59. So while the target remains the same, what we need to do is to address this move here after the wave ended there, and as you can see, we have quite a nice three waves move to the upside here. This is being called a zigzag. Let me try to mark it down for you here. Let's make it out of this color. So this is A, B, and C. So A, B, C as a zigzag, and now we are looking for this to be actually the end of a wave of a bigger degree. So let's say A, and let's change the color so that we know that this is of a bigger degree. So wave A, and now we are looking for this B wave here, and this B wave ended all the way to the downside here. This is being called an irregular flat, and the whole structure and the whole correction started from this very moment, and I will try to take a shape here to mark the moment. So from here, and it will go all the way to the upside until the 61.8 should be reached. Now you might ask, how do I know that? Well, of course we don't know that for sure, but we are playing here with educated guesses, and the educated guess here is that a five-way structure should appear from this moment to the upside here, and this should go as a flat to this level. Now, to come to the purpose of this presentation is the triangle here that we are having on the lower degree. This triangle here, and this triangle here normally should have been a continuation pattern if the move would have been impulsive. But the move is not impulsive. The move to the downside is corrective, and because of that, price just reversed. Whenever you are seeing such a contracting triangle that acts as a reversal pattern, think of it as being a bullish sign in a downtrend or a bearish sign in a bullish trend, as it implies at least 61.8 out of the previous move will come, but also it implies new highs. So these highs here above 133 are going to be broken. Now, this move to the downside also had one problem for the bears, in the sense that it is channeling too well, as you can see here, and not only that it's channeling too well, but the corrections within the move are almost the same. Whenever this is happening, with corrections being almost the same, then you are looking for price to just reverse out of this consolidation. So looking now for five-way structure to the upside, and the channel being broken, triangle being broken. And what I would do today, I would just buy calls. So you have two options here for your buying calls. So buying calls either for end of day expiration, as price normally should advance higher, or you should buy calls for end of week expiration. This is Tuesday, and end of week implies 3 more trading days. So it depends on the aggressive type that aggressive trader type if you are. So buying calls with end of day or end of week expiration based on this outcome, and normally this can be done right now 31.76. In order to buy calls, you are looking for price at the expiration date to be bigger than the striking price, meaning the price that you actually bought the option for. So this is what we recommend here on fair binary option. And whenever you are seeing again a contracting triangle that acts as a reversal pattern, try to look for the upper trend line or the lower trend line, depending on the previous trend, to be broken, and then just engage into buying calls for the outcome. Thank you for being here. This is again fairbinaryoptions.com, and none of this would be possible without our official sponsor and our generous help here from Lion Knife.